Well, I just got back from talking with one of today's speakers, U.S. Securities and Exchange Commission Chairman Mary Schapiro. She'll be one of the people who defines the true shape of financial reform as Dodd-Frank is turned into regulatory reality. I started off by asking Chairman Schapiro about the difficulties she faces regulating the OTC derivatives market. Here's what she had to say.
This is a market that's really grown up by a lot of rocket scientists, by a lot of very smart people on Wall Street. How are you going to be able to create a staff that truly understands that?
Well, we actually have a couple of rocket scientists ourselves now, and that's very helpful. And part of our goal is to make this a very transparent market, and so that not just the regulators understand what's happening, but the public understands, and other financial institutions understand what's happening as well. And I think that will make a big difference. We're engaged in a lot of training for our people. We're bringing in as many new employees as we can who have deep experience in derivative markets, on trading desks and so forth, and then we're relying on industry to help educate as well. We have a role now directly under Dodd-Frank with respect to compensation regulation. So we are looking very carefully at compensation practices at investment banks, and we'll be working very closely with the bank regulators to develop guidelines or rules related to compensation that may incentivize excessive risk-taking. I would say all of the U.S. regulators and all the regulators around the world are highly conscious of not wanting to create an unlevel playing field or distort business practices because of regulatory regimes that are in place in one jurisdiction but not in another. So there's been a high level of coordination, I would say, between U.S. regulators across the board and European and Asian regulators.
When you go to sleep at night, or you can't go to sleep at night, and you're worried about something not working, what general area is that in?
You know, we created a whole division at the SEC, a brand new division called Risk Strategy and Financial Innovation, to actually stay up at night and think about these things too. And so we worry about new products. We worry about the unintended consequences of new products on retail investors and on institutional investors as well. I worry about market structure and making sure that we get it right as we try to stabilize our market structure a bit more effectively.